Thank you, Mr. Chairman, and thank you, Ranking Member, and thank you, Chairman Powell. Good to see you again. I just have a couple quick questions I'm going to try to get through. Mr. Chairman, I brought the Federal Reserve supervision and examination of insurance savings and loan holding companies up previously with Federal Reserve Governor Quarles, and my staff brought this topic up with the Fed staff on several occasions. Since the economic crisis, a number of insurance and saving and loans holding companies has dwindled from some 30 to just 11, according to the Fed's 2017 annual report. I have two of these insurance companies in my district, which employ thousands of people, and one of them just announced that they are closing their depository institution. While I understand that there are several business reasons for an insurance, savings, and loan holding company to close their own depository institution, there is little doubt that one of the factors why they are closing them down is due to the burdensome and inefficient supervisory regime by the Federal Reserve. I have worked with my colleague on the other side of the aisle, Mr. Rothfuss, to introduce legislation that would force the Federal Reserve to tailor their bank-centric regulations to those to insurance companies, which are wholly, as you know, different from banks. While I think there should be some cost of admission for an insurance company to own a depository institution, I don't think that cost should be so high that it makes no financial sense to own one, which is where I think that we're headed. Do you think that this problem that these insurance companies are closing their banks, that this is part of the reason, or is it the Federal Reserve's desire for no insurance companies to own a depository institution?
It's certainly not our desire to drive anybody out of owning a bank who can legally own a bank. I think in the case of depository institutions that are owned by insurance companies, our interest is in the safety and soundness of that depository institution. So we work very carefully not to duplicate the insurance regulatory work that the state insurance supervisors capably do. But we have a role to play as the holding company supervisor as it relates to the depository institution. And that's what we care about. That's really all we care about. And I think, you know, my recollection, these companies are getting out of owning depository institutions mostly for business reasons as opposed to for regulatory reasons. In any case, we're committed to doing that as efficiently as we can. And
are you familiar with our legislation?
Yes,
is it
I am.
something that will be helpful, or do you have an opinion?
So we've raised concerns. When the concern that we've raised is that we would be effectively out of the business of supervision at the holding company. We would promulgate standards, but they would be supervised by the insurance supervisor. And the insurance supervisors, they do a fine job of supervising insurance, but they're not prudential regulators of banks. And we don't think we think if you're going to own a bank, you should be subject to regulation by a prudential regulator of banks, which would be us in this case.
But you'd be at least willing to kind of see if we could tweak it or work together,
Absolutely,
maybe?
absolutely.
Okay. Thank you. On another good note, let me also say thank you for being very responsive to our letters to you from the Congressional Black Caucus and from me on diversity. I really appreciate that. As you'll probably recall, we've had several conversations about the Beatty rule that's patterned after the Rooney rule. If you're looking for minorities, and more specifically African Americans, to serve on the Federal Reserve, then you have to put them on the list. You have to include them in the room. So while we weren't necessarily overjoyed with the last appointment, I am pleased that Mr. Bostic is there, and just hoping as more openings come that you'll keep that in the back of your mind. Lastly, I have kind of an odd question. I was on my way back to Washington. I stopped in a restaurant, and a gentleman came up to me and chased me down and said, I know that Mr. Powell's going to be coming before your committee. Would you ask him this question? Well, we're going to kind of paraphrase it because my team wasn't quite sure what he was asking, and he stated it more as a fact. But I think what the constituent was asking me, and he stated it more as a fact than a question, but he essentially wanted me to ask you whether or not you believe the Federal Reserve's monetary policies exacerbates the wealth inequality in our country. I think for some reason he felt that organizations who receive the interest payments on our national debt is destroying the middle class.
No, we don't think monetary policy is exacerbating inequality. We think, in fact, it's helping those who didn't have jobs get jobs. And so those are the people who need those jobs.
Thank you very much. And I yield
Time
back.
of the